I do have a minor trade I want to talk about, and it's going to dovetail. It started out as one of the million little things, and it will become a million little things over the next few weeks. But I thought it was important to kind of talk about it and flesh it out a little bit more. When it comes to trading, there's nothing more and nothing less. You've got one job, okay? And you can't lose sight of that. And it's nothing more, nothing less. So your one job is to find a trend, hop on, and then hop off when it appears to be coming to an end, okay? Now, before we go any further, I'm not saying you want to be like the rat going for cocaine, hitting that little button over and over and over and over again. Okay. You want to take well chosen trades. And with my methodology, the core methodology, you want to be sitting in those trades for a long time until stopped out, like the ones we just showed earlier, for months and months and months, and hopefully years. Okay. I saw a trader who I really respect, and maybe he could flesh it out a little bit further, but he was basically talking about how round trips you could really make a lot of money percentage wise, and he's right. Okay, so we just hit, or we came close to hitting the IPT and the NUAI, so that's a round trip. Okay, and if you do enough of those, especially if you catch the longer term winners, you'll do really well. But the problem a little bit with that thinking is you got to be careful to make sure you're following a solid methodology. And I think that was his point, is he's talking about his methodology, and you're not going in and out, in and out, in and out, in and out. Okay. That in and out stuff is fun. Hope that sentence isn't taken out of context, but it's detrimental to you mentally, and in the end, probably monetarily too. Now, I do take those occasional day trades, and I've got a couple day trades on now, but I try to resist the urge. And one thing that just kind of hit me like a ton of bricks yesterday was I backed way off of the day trading because it seems like it was just hurting my account, because all these position traders are doing so well. You know, why am I going to dick around for a few $100 here and there when everything else is doing so well? One thing that dawned on me yesterday is, and I told the story before, I have a doctor friend of mine, and we talk quite often about trading. We talked a lot yesterday and today. And anyway, a while back, I said, yes, boy, my back, my upper back, just like, it just hurts so bad when I day trade. Is there anything I can do for that? He goes, yeah, stop day trading. now he's way worse than me. He sucked me into a lot of day trading. Okay. So I'm admitting guilt here, but I back way off in that. And guess what? My back feels 1,000%. It's a little tight still. There's still some stress in my life, but there's not as much stress from that. And what I have found is that if I wait and wait and wait, like that BE, and I think it was U the week before, and occasionally an ETF here and there, okay? Especially if we were in a route lower or something, I might short some futures or whatever. But I try to minimize that trading. And the other thing I've done, and a lot of people say, oh, first hour is amateur hour. Well, you can get a lot of good trades in the first hour as far as day trading is concerned. But I have learned there is something to that. You're probably better off letting everybody fight it out, and then maybe at the end of the day, take a little action. That's one of the things I still do at the end of the day, specifically, usually the last 20 minutes. I look for some moves to happen in the last 20 minutes. Options, for instance, zero DTE options can get fairly cheap. You got to be careful not to buy them just because they're cheap, but there are some things you can do intraday. So long story endless, you don't want to be in and out like the rat going for cocaine. Mentally and monetarily, you cannot handle that. We're only wired to make so many decisions. Without going too far into it, and I imagine that me going off on a tangent, but there's a book called Limitless. I haven't finished it. He's got a lot of good information in there, but he spends a lot of time telling you what he's going to tell you. Just tell me. But he talks about the fact that I need to get my stats right, but the average person consumes more information, or is inundated, is probably a better way of putting it, in one day than a person 100 years ago did in their entire lifetime. And even going back 20 years and 30 years and 40 years, those numbers are pretty crazy too. about how much we're being inundated with. And so if you're adding in that day trading and all those decisions, each decision comes with emotions and stress. That's neurology. That's inescapable. You're going to put more and more pressure on yourself. So anyway, kind of a talking out of both sides of my mouth. But if you are going to do some day trading, make sure they're well chosen. Maybe take Russian dolls, okay, something that's set up looking pretty good. And of course, take ogres, but make sure it's like a setup in a trend, kind of like a gap down, and you're looking for that reversion to the mean type of move back in the direction of trend. So in theory, yes, maximizing the round trips, if each is conceptually correct and statistically valid, would make you the greatest amount of money. So if you did have some sort of edge that was much more active and you were running that edge like the rat going for the cocaine, right? Then yeah, you'd make the most amount of money. That's a little bit of a fantasy type of thing, but with the longer term trend following, as you see with the service lately, and again, knock on wood, we had a good run. It's been great markets, but we've been doing what we're supposed to do, and we're finally profiting from it. I've bored so many clients to death by telling them not to do anything. But if I'm not going to put for months, okay, when there's nothing happened, but if I'm not going to put money into harm's way, why should you? Okay. And without going into details, as I've learned before, people crave action. It's like years ago when I wouldn't recommend anything. That was back in the trading markets days. The salesman would call me. He's like, Dave, you got to recommend something, because the salesman knew if I wasn't recommending anything, everybody quit, okay, because people want action. But if I recommended something and it failed miserably, we'd lose a client or two, but rarely nearly as much as by not recommending anything. So long story endless, I know people crave action. So that's one thing that I want to add to this segment too, is nothing more, nothing less. You've got one job, but there's a lot of things that need to be added to this, like don't trade for recreation, don't trade when you're pissed off at your wife or your significant other or both. Now, here I say, in theory, yes, maximizing the round trips, if each is conceptually correct and statistically valid, would make you the greatest amount of money. The problem is there's a lot of ifs in that sentence. So make sure you have a methodology that's well defined, okay, from a charting standpoint, from a money management standpoint, from a position management standpoint. Then by all means, the most amount of trips will pay off. Now you can see the open portfolio, and it's actually looking a little bit better now than it was when the snapshot was taken. But this is the ultimate goal. Yeah, so if you can make a lot of these round trips, okay, then you're going to make the most amount of money. But this is a well-defined methodology. And again, we might go weeks and sometimes a month or more without any setups. And of course, my sales go to zero when that happens. And of course, everybody quits, and then we hit a wave like this. That's another one of those nuances, right? It's streaky. I've been told in the past, don't use that word. It sounds too elusive. Well, it can be elusive, but these are the ones that we have been waiting for, okay? So it can be done. So yeah, lots of round trips in the works, but it did take a lot of time and a shit ton of patience to get here. Now, getting back to your one job. Oh man, can I tell the story? My mother-in-law, she had a Mercedes, and anybody's owned a German car knows that they're great until they're not. And it wasn't like it was a classic or anything. And that's when these German cars are the worst. It's like they're not worth fixing. You know, you might as well just get rid of them. Anyway, she said it's in excellent shape, and she's trying to sell it. And we get over there, it's like it's dirty inside and out, and they got duct tape around the little door handle or whatever. And my wife, Valen, told me, Dave, you can fix that, can't you? I'm like, yeah, I guess so. And I guess I can tie this back to trading a little bit. And if you want to become mechanically inclined, believe me, I wasn't mechanically inclined years ago, but I'm very mechanically inclined now, to a point where all the neighbors come to me to fix, and friends and all, to fix stuff and for tools and everything else. Just been a year and a half building a table, and I'll throw a picture in post. But anyway, long story endless. If you're going to take on a job, one way to become mechanically inclined, obviously you got YouTube now. I didn't have YouTube when I was learning all these things, but one thing you do is watch some YouTubes on it, okay? And look for the gotchas. So in trading, you need to look for the gotchas, okay? And that's important too. And a lot of people send me systems, and I'll tell them the gotchas, and they'll get upset, and I'll say, well, you know, okay, go ahead and trade that and come back in 2 years. Nobody's ever come back to me in 20-something years after 2 years of trading something where there's a lot of gotchas. So look for the gotchas. But I knew the gotcha of this job was that there was a point where everything's going to be taken apart, and if the door panel were to drop, it would rip out the electronics, and those electronics would cost thousands of dollars to replace, and the car was worth a few $1,000s, if that. So that would pretty much nearly total the car, you know. So my wife and I work really well together. There's a whole story about that. We curse at each other a lot, you know. Our nickname is the MF Contractors. That's another story too. But I explained to her the whole procedure and everything, and she goes, I'm going to let you do your thing. When you get to that point, you let me know. So I tell my wife, okay, we're ready. And right about that time, my brother-in-law showed up, and he's like, oh, well, he's here. He'll help you. So we get everything. I tell him what he has to do and everything. And so I'm making a little connection. I let go of everything. I'm making a little click connection. And son of a bitch, he drops the panel. And he's right here, literally right there, and I'm in the window, and I stick my head through the open window and hollered in his ear, you got one effing job. So anyway, luckily we were able to save it. But what was funny about the whole thing is after the fact, it's like his mom, who revisited, she's like, oh yeah, when he was a kid, his nickname was Bam Bam, so, because he just smashed and broke everything. So, you know, maybe not have him around if you're working on something, okay? Or maybe not have a distraction if you're trading. So getting back to your one job, find a trend. That's going to make no sense, will it? All right, so this is an older chart, but I figured it's worth showing. So here's a stock coming off of lows. I didn't even realize it was a coal company at the time. And you can see lots and lots of Landry light looking pretty good. Big blue arrow pointing higher. Persistency, something that I talk about, okay? Now, hop on. Except for like the Landry 100, that's hypothetical. So you don't just want to jump in midstream. And then with a few caveats, something like crypto, where you get a bull market every 6 weeks or so, you can just buy those new highs. And the Landry 100, if you're going to buy 100 stocks, yeah, you could just buy new highs. So hop on, but that's on a setup, okay? So here, the stock pulls back. It's a Landry light pullback, and the entry was there, okay? And you can go and look at the trading service on this. And then you want to hop off when it appears to be coming to an end. So this one, we sold half, and then we rode this for a long time. Jeff, did you ever get, I don't know if Jeff's here today. Jeff, do you ever get stopped out on this one? Jeff adjusted for the dividend on this one. But anyway, the point I was making here is that this was like a 500% move, and it's kind of hard to hold it for weeks and months when you're underwater compared to where you were. But that's open profit drawdown. Again, like Mr. Dennis said, you have to just live with that. It comes to territory. So that's your one job. You got one job. Now, cash is not trash, okay? Stupid things that rhyme can get you to a lot of trouble in markets. Sell them and go away. I had the best summer of my life. Probably, okay? I'll have to go in and look at it. But I'd be willing to bet I had the best summer of my life. If I'd have sold in May, I'd be hating life right now. Years ago, I had a client, we had a shitty summer, you know, which it happens, right? Because the markets tend to be choppy. He goes, everyone knows you should sell in May and go away. I'm like, that's not exactly true. Cash is king, okay? Nothing wrong with cash. I got in that stock early. I put my capital in the harm's way, okay? Because I said I had to do it, right? The NUAI. And my goal is to get cash back as quickly as possible. Now, it might take weeks or months, right? Or I might get stopped out at a loss, as I just showed you. But ideally, you want that to happen as quickly as possible, and you want to put it back in your pocket. That's what I just did, and that's what Jim just did, and whoever else. it's following along, hopefully. So if it hasn't entered IPT yet, then it's close enough for government work. Go ahead and take it. So you want to work to increase it, okay? And then you want to sit on it, okay? And you want to make darn sure it's worth putting capital back into harm's way. And then, of course, rinse and repeat. Now, don't get too full of yourself. Like you can see, I'm kind of like, I've never seen Big Dick so excited. It's like, well, that French voice comes out now. I've got a dog and I speak French to it and it loves it, but it won't make any sense, believe me. But we have a little stuffed animal that Lyle the crocodile. For some reason, Lyle is French. He started out talking like Grover and then it became French. But Grover sounds very French if you listen to him. Is Grover French? Does anybody know? Anyway, once you start making a lot of money, you feel like you have the Midas touch, okay? I feel like I have the Midas touch because I was a little nervous buying this wild and crazy stock this morning, but it's like I had all this confidence behind me, you know? It's like, but you got to be careful. And this is where you get into a lot of trouble because you'll start to deal in mediocrity. All right, we're coming out. Who just got a I just got a pop up. Somebody else just came out of NUAI. Good. Fantastic. This is 2 days running. Believe me, it's not always like this. So it's like I don't always have this Midas touch, okay? But this could go to your head. And this is the hardest part of trading, especially if early in your career you have a lot of success. I've seen so many people make a shit ton early in their career. I had one friend of mine made $1 million out of roughly $5,000 of questionable origin, and then he ended up homeless, okay? Died a miserable death. That's a wow, womp womp, that's a bummer. Yeah, but I remember telling him, I was like, Jimmy, you know, when he's like around Jimmy, when he's around $1 million, I said, this was back when $1 million was still $1 million. This was, geez, was this this is like early 90s, I think. I forget exactly when. But I said, Jimmy, I said, if you're that good, okay, sell everything. Put the money in an annuity and take out a salary. I think back then 50K would have been, especially, you know, his lifestyle, 50K would have been plenty enough to live on. I said, sell it, sell everything, get an annuity with about 50K, okay? And if you're that good, okay, if you're that good, keep out 50K or even 10K because you're that good, right? And parlay that. And he says, I'm not going to take financial advice from you. And I'm like, okay, fine, you know, whatever. Because when he's at $1 million, I'm like, what's your plan here? He says, oh, when I get to 5 million, I'm going to buy a sailboat and live on. I'm like, okay, good luck with that. But you got to be careful when you have that Midas touch because you could end up in mediocrity. And I just wrote an article recently. It should be on my website. It's also on Substack. Mediocrity is the greatest sin, and that's Anthony Bourdain who said that. And you don't want to deal in mediocrity. The way we got to where we are with the current portfolio, it doesn't always look like this. Believe me, if it did, you never see my fat ass again. I almost made a joke. That's a bad idea. But people forget how you get there, right? So the way we got here was carefully chosen setups, sitting on our hands a lot, waiting, not doing anything. And then finally, you get a nice bull trend comes along and you get some nice setups and then you take them, okay? Got to be super careful. And oh, we got another sold half. Fantastic. This is exciting to watch this in real time. You guys have no idea. I've never really done this before. This is so much fun. The pop-ups never came up before, so I'm getting a lot of pop-ups from this. This is great. Yeah. Oh, whew. Thank you, God, and thank you guys for all your kind words. Appreciate that. But anyway, again, you got to be really careful, especially when you think you have that Midas touch, because you can get in a lot of trouble. And as I've said 1,000 times, again, I need some new material, but it's all relevant. You know, it's hard to, you know, not tell the same old stories again. But when you have that initial success, especially, okay, if you get your ass handed to you for 3 or 4 years and you don't give up, you're going to be successful. I guarantee that. And there's been a lot of people have said this a lot more eloquently than I'm going to say it now. Your early success or failure is not a predictor of future success or failure. And I've seen people quit profitable businesses, tell the boss to F off, quit his job, and die from alcoholism. In one case, womp womp again. So you got to be really careful. But you think about your equity curve and your ego, and when your equity curve is going down, and it does for a while, your ego goes down and goes down and goes down, and it overshoots it quite a bit. You get pretty distraught, pretty depressed, pretty bummed out, okay? And then when that equity begins to increase, like right here, all of a sudden you think you're God again, and your ego just shoots higher. And that's when, right around here is where you start dealing with mediocrity. You're lottery rich, right? You're sitting on this big pile of cash you just made, and you just want to go out and fritter it away because I'm Dave Landry, or I'm whoever you are, and you're making all this money. So this is very important to not let it go to your head in good times, and then don't get too bummed out in bad times. And the thing is, again, how did you get here? You got here, at least this peak of this equity curve, right, through carefully well-chosen setups, through proper money management, through not splitting hairs and taking partial profits, and all these things I preach every day. So always ask yourself, how do you get there? And then make sure you keep doing what you're doing. Now, it takes a shit ton of discipline, especially patience, okay? You didn't shoot everything that moves under the guise of hunting outliers. Our money is made on the occasional outliers, okay? That's where the real money is. That 100, we've got one that's up 150%, and hopefully next year, this time, we're up 250% or 350%, and so on and so forth. But that was a carefully chosen setup. And if you go back and look at any one of these setups, and if you want to pick them apart, please do, and let me know and tell me, like, Dave, you should have taken this for whatever reason. But everything that I preach was in all of these setups, okay? And again, I don't want to temper your expectations too much, but they don't come along every day, and you're going to spend a lot of time sitting on your hands with me. And you know what? That's as valuable as the actual setups when they finally come along. Because if you lose all your money on crappy setups or mediocre setups at best, and in addition to that, you're mentally not going to be prepared. Mental capital gets used up. Discipline gets used up. I was telling a guy today in the gym, a while back before I met these guys, or these guys invited me over to work out, I would say, I'm going to go work out today, but I'm going to work hard all day. And at the end of the day, I'm going to go work out. Well, at the end of the day, I'm tired, I'm pissed off or whatever. And it's like, you know what? I don't feel like going to work out. I've never worked out at the end of the day, maybe once, okay? But if I wake up and go, I can go. And that's because discipline gets used up. And Scott Adams, what's his book? How to Fail at Everything and Still Succeed, or something like that. Good book. I definitely would recommend you read that. It's under books to read, davelandry.com/books-to-read. He talks a lot about discipline getting used up, and that's something very important to talk about.